Hello and welcome to Blythe Business News. Today I'm joined by Mark Frankcom, who's the Finance Director of National Milk Records. National Milk Records at the very heart of the UK dairy industry, listed in London on the Aquis market, and one of those unusual companies in the juniors has an enviable record of paying dividends and doing well. Today we're announcing their half-year results. Mark, welcome back on the programme. Look, everything looks good. The good numbers are up, the bad numbers are down, the dividend's there. But rather than me, give us a quick highlight on the results as you see them, please.
Yeah, I'll be happy to. I'm firstly glad to say that our revenues for the period are up. So this is the 6 months ending December 22, and our revenues were in total 5% better than they were a year earlier. So that's good to see. And I'm also pleased that a lot of that growth has come from our core business. So our core business up 5% as well, with milk recording up 3.9%. And revenues from Yoni's testing up 7.3%. So that's good. But we're also seeing growth in genomics. So as well as our core, we're seeing growth in our new areas. So genomics testing revenues nearly doubled compared to a year earlier, and delivered £337,000 worth of revenue. So that's great from a revenue perspective. And headline EBITDA, so that's earnings before interest, tax, depreciation, amortization, is actually down. But importantly, we've reported it on a like-for-like basis because there are three costs in the first half of the year that are slightly exceptional. And when you take account of those, then our underlying like-for-like EBITDA is actually up by 17% in the year at 1.34 million. So EBITDA growing, turnover growing, and we've also seen improvements and increases in our investment. You said, Tim, that we've paid a higher dividend. In November, we paid 2p per share. And we've also seen a reduction in net debt in the period. So overall, a good balance of financial performance.
Mark, you touched there upon the EBITDA number being held back for the period a little bit. Can you just talk us through the reasons why this is, please?
Yeah, of course. We felt it was important that there were several costs in the first half of this financial year that simply weren't there in the first half of the comparison period, and we wanted to draw those out separately. And they are the investment that we've been making to take our new technology called GenoCells into the US market. So we've spent about £160,000 in the first half of this year on research into the US market to understand that market better. We've had field trials, customer research, and that investment is felt in our numbers that wasn't there a year earlier. Also, we've restructured our laboratory operations, and we've had a restructuring cost at the back end of October in the first half of this year numbers. And of course, there was no comparative restructure cost in last year's numbers. And lastly, it's slightly complicated, but with the long lead times for cars, we've had our finance leases on a lot of our vehicles have coming to the end of their term, and they're being replaced by short-term rentals. And finance lease costs are felt below EBITDA. They're felt in the interest and depreciation lines, whereas short-term rentals are felt in the overhead lines. So we've seen between those three things, cars, US GenoCells, and the laboratory reorganization, a total of nearly £290,000 worth of costs in the first half of this year that simply weren't there a year earlier. And I think that it's important to understand those because none of those are underlying costs, and it's important, I think, for people to understand what the sort of true underlying picture is in terms of the development of our profitability.
Which is looking very good. You mentioned GenoCells a couple of times, Mark. You said, I think, financially performance had doubled. Give us a quick update. What's going on at GenoCells?
Yes, so GenoCells is our technology that we're bringing to market in UK, our home market, but also we have a license to take it into the United States. It's a disruptive technology. It's very much in our sector. So it's about using genomics technology to test samples of milk, in fact, the bulk tank sample of milk, in order to determine via the DNA in that bulk tank sample the animals in the herd with disease, so particularly things like mastitis or even subclinical mastitis. So it's a very important technology. We are working to bring that to market in the UK and the US. And what we've been up to in since we've spoken before is to develop the underlying software engine to enable us to bring the genomics and GeneSells results to our customers, and also to be able to build them. And that's made a lot of progress in the last 6 months, and also building our planning, our launch planning in terms of sales and marketing, in terms of training and development, in terms of commercial. So we're getting nearer all the time to launch the GeneSells technology in our domestic market, and then to take it into the United States. And it's worth saying briefly that genomics testing, so this is the testing of individual animals, we're already doing that through our lab. So we have capability to do that genomics testing in our lab, and we have many samples going through. So the increase in genomics reporting and revenues that I spoke about earlier is of the individual animals testing, and we're looking to complement that with the GeneSells milk testing later this calendar year. Okay,
let's just step away a little bit from the core business, in the UK dairy industry and all the testing you do there with UK milk and GeneSells. You've also grown other revenue streams. Talk us through some of those expansions.
Yes, so I think that the key here is that our customers understand that taking advantage of the NMR service offering is helping them improve the performance of their herds. So taking additional testing, for example, again, about Johne's disease or BVD, another cattle disease, helps a farmer control the disease in his herd. And if he's controlling disease, then he's improving efficiency, because of course a healthy animal is an efficient animal, and an efficient animal is a sustainable animal. So it's in the interests of the farmer, it's in the interests of his milk buyer, and in fact, the interest of the whole supply chain, that we're doing more testing and demonstrating the efficiency and sustainability credentials of milk supply. And I think that is a key driver. Service penetration is a key driver of the growing revenues elsewhere.
A cracking set of results. Well done, 6 months. But we're always looking to the future. What can investors, what can viewers be looking out for from National Milk Records in the next 6 months? What are going to be the headlines we should be looking for?
So obviously we want to keep on doing well what we're doing well. So our focus is enormously on our core business and delivering really good, excellent customer service in our core business, and making sure that the business that we have is being well looked after, and therefore is participating in the services that we have to offer. So driving, improving retention, driving service penetration, and growing revenues in that way. But we'll also in the second half of our financial year and the first half of this calendar year, we want to be accelerating our strategic focus on our other plans, making sure that the ambition that we have for genomics and GeneSells is converting into actuality, and that we're getting closer and closer to the launch of that disruptive technology, both here and eventually in the United States.
Well, Mark, thanks for joining us. That was Mark Frankcom, Finance Director of National Milk Records. As I said, National Milk Records can be found on the Aquis market with the symbol of NMRP. Mark was updating us on a cracking set of half-year results. That's it from this edition of Blythe Ray Business News. Thanks for watching.